I guess the biggest thing is that markets have been driven by abnormally low rates, abnormal liquidity, and big growth differentials.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now, guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Raoul Pal and Mark Holowesko discuss how a weak dollar creates global opportunities, the future of U.S. energy policy, and finding free cash flow. Join them to unpack these insights.
Do you see the kind of unbundling of the global economy, Trump's idea of, the re-regionalization of the global economy is another opportunity set. So we're not as global as it was, the same capital doesn't flow around, so therefore you're going to get more specific opportunities, let's say in the US or in other countries, as people kind of retreat back to their own home ground.
Look, I think some of the retreating back to your home ground might be forced. A lot of governments around the world, have budget problems, as the United States does. And a lot of governments or a lot of countries around the world support the U.S. in terms of funding. And I think some of that funding has to go back to home countries to support the fiscal needs in those countries. So Russell Napier, who you might know, has done some great work in this area, talking about how capital might be forced home. And so I would agree with that. But, I think that as a money manager, the most interesting thing to do is to not try to predict what's going to happen, but try to look into the market and say, what is the market saying will happen and where you have the biggest disagreement. And, tariffs are a great example. All these auto tariffs that are going in place, if you look at some of the original equipment manufacturers in the auto space, one of the companies that's hurt most by tariffs is General Motors. General Motors, I think something like 40% of their cars are produced in Mexico.
Yeah.
Some of the producers like BMW that has a facility in South Carolina, and Subaru that sells lots of cars in the mountaintops of Colorado. Even though those are foreign companies, they're not really impacted that much by tariffs because of where they produce and et cetera. So I think what you need to do is take a look at a lot of these issues that are going on around the world and say, what do stock prices reflect? What truly is impacted by it? But to your question specifically, I think capital will flow home. I think production might be forced back to certain home countries. And I think that's inflationary, quite honestly. General Motors pays $2.60 an hour for an auto worker in Mexico. They pay $26 an hour for an auto worker in the United States. If you force General Motors to produce more cars in the United States, that's a big difference in labor costs that they have to overcome. So I think the question you've asked, basically the response to that is, that's going to cause higher costs of capital and higher rates of inflation.
Crypto had another eventful day. Elon Musk stirred things up again by selling his social media platform X, formerly Twitter, to his own AI company, XAI. This surprising deal, valued at $33 billion, immediately spiced up a lawsuit Musk faces over allegedly misleading Twitter shareholders. With a judge rejecting Musk's bid to dismiss the suit, this sale could now expose XAI to further legal headaches. Meanwhile, crypto got a regulatory boost in the U.S., with the FDIC and CFTC easing restrictions. Banks under FDIC supervision no longer need prior approval for crypto-related activities, while digital asset derivatives will now get equal treatment to traditional ones. This shift signals growing institutional acceptance and could spark renewed interest from financial players. But it's not all good news. NFT sales have plunged dramatically, down 63% compared to last year. Despite this sharp decline, some collections like Pudgy Penguins and Doodles defy the slump, outperforming even bigger names like Bored Ape Yacht Club.
Within the United States, there's been big growth differentials between the Mag 7 stocks, the big dominant tech stocks, and the other 493 companies. And there's also been a big growth differential between the U.S. and non-U.S. markets. Most of the things that caused, I think, growth to really percolate to the extent it has, I think are reversing. You're getting a removal of liquidity in the system. You're getting more normalized interest rates. You're getting central banks around the world that are unwinding their balance sheets until yesterday, which is a very interesting thing that I think happened yesterday with the Fed slowing that pace down. And you're getting governments realizing that they can't have 6% budget deficits as a percentage of GDP when the economies aren't, in trouble and unemployment's at low levels. And those are going to be reversed. So all this liquidity that was thrown into the system, when you have this much liquidity that was thrown into the system, it tends to find its way into financial markets. And to me, that seems to be reversing. And the other thing that seems to be reversing is a lot of the reasons why American exceptionalism was in place and why American profitability was so strong were lower interest rates, lower tax rates, outsourcing. Those things are reversing as well. And we have, the added elements of tariffs, which created a lot of volatility. But from a stock picking perspective, all that is phenomenal. I mean, the more volatility in the markets, the better. I mean, this has been a great year for stock pickers so far, even though most markets are down. And I think most stock pickers are probably making money on down days because of the volatility that's going on. So I would say the biggest issue is liquidity is being removed from the system. And I also think that most people are anticipating that interest rates will go back to where they were post-GFC, post-global financial crisis. Well, I think that's totally misplaced. I think that, post-GFC, we had sort of inflation 0 to 2%. It went up a little bit above that, but generally it was 0 to 2%. Prior to the global financial crisis, we had inflation of 2 to 4%. And that to me is a more normal range. And, interest rates were totally abnormal from the global financial crisis through COVID. Now, we're just not going to go back to that period. Most people are in the business today have only experienced that, so they think that's normal. Then they think going back to normal is going back to the post-global financial crisis period. And I don't see that. So I think we're in for higher rates than most people anticipate. I think we're in for less liquidity in the system. And if you have higher rates, you have a higher cost of capital. That's good for value stock pickers.
Bitcoin's price slipped again today, dipping to an intraday low near $83,387, its fourth consecutive day of losses. This decline mirrors Wall Street's struggles, where inflation fears sparked a significant sell-off. The Dow fell 700 points, while the S&P 500 dropped 112 points after unexpectedly high inflation data and the shock of President Trump's new tariffs on imported cars, further unsettling investors. Many traders are now cautiously awaiting April 2, a day Trump ominously labeled Liberation Day, when he plans to reveal even more tariffs, this time targeting pharmaceuticals. Veteran trader Peter Brand warns that Bitcoin could fall sharply, potentially targeting lows near $65,635. Crypto analyst HTLNL agrees, highlighting Bitcoin's recent failure to break critical resistance, confirming bearish technical signals. But not everyone sees doom ahead. Despite weak demand on the spot market, analyst Cole Garner highlights surprising strength from Bitcoin whales, major investors who've recently increased bullish bets dramatically. Historical data suggests their activity often precedes significant rallies, sometimes leading to gains exceeding 50% within weeks. Additionally, the crypto market got some regulatory encouragement as the FDIC clarified rules allowing banks to easily engage with crypto products without prior approval. This step could open doors for further institutional investment, potentially softening the current bearish sentiment. With such mixed signals, Bitcoin investors face uncertainty, but also opportunity in the days ahead. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.